Welcome back to Ferocious Education. This is Zep. Today I'm going to be talking about GME, GameStop Corporations. I'm going to go through technical analysis, then news and what I think about this company, anything I can find onto there. Let's jump right into it. On a 1 week perspective, what we get to see here is a really nice uptrend that continues to grow. That really looks bullish on a 1 week perspective. In terms of the ADX, we're sitting at 43.78. Above 50 is where we start seeing the dangerous warnings of a downtrend. William percent R here looks overbought. Momentum seems to be really strong and bullish ever since the week, I would say off the 30th of August to 6th of September. Moving averages looks really bullish, and today it actually closed above the 200 SMA line, or this week above the 200 SMA line. That makes it really bullish on a 1 week perspective. Now on a 1 day perspective, what we get to see here on an MACD that doesn't show much strength or continuing strength, it just basically is a stable level, almost accumulation level. Volume has increased from the day before. That is a bullish. Unbalanced volume seems to be a continuation in terms of that increase. William percent R puts this one on neutral, and ADX here gives us a really strong warning that a downtrend or a reversal might be seen here. Moving averages look extremely bullish, and it's just above the trading action zone. So between the 10 SMA and the 30 EMA, that's where reversals are likely. So if it does dip all the way down to almost $11, within that region, it can see reversals. On the 1 hour perspective, what we get to see here is nothing much that we can get to see. I mean, 1 hour is a very short term, but it looks like it might see a little bit of a downtrend into Friday morning, I wouldn't call it a downtrend, I'll call it a pullback, but it still looks bullish on the moving averages. The moving average band, it's ever so increasing, so we don't get to see that it's actually falling down through it. But for the sake of argument, 1049 in the bottom, 1166 in the middle, and 1282 in the top. Now, moving on to stochastic fast and slow, what we get to see here, it's actually looking quite stable. It looks like it's continuing to hit higher highs. We're looking into an uptrend. What we get to see here is a really massive uptrend, although it's a little bit of a dangerous one because it's almost parabolic. So when you get to see this kind of trend, it might also look very scary. Now, if we were to look into a channel, you don't get to see that you get to see it's almost ever so increasing, that we don't get to see an exact top on it. But if we were to look into the top of the channel, it would be somewhere around here, and it would be trading on the top of the channel, on the top half of the channel. So it still looks bullish. If it does dip into the bottom of the channel, you do expect it to see between $14 and $11. Now Fibonacci retracement to see supports and resistances onto this one. So going on, Fibonacci retracements going all the way from the 1587 down to the 377 cent mark. So it was a penny stock not a long time ago. 1328 seems to be the current support on the Fibonacci retracement, and then 1124 following that. Current resistances, I don't see any in the vicinity unless we go all the way back to 2019, where the current resistance would be somewhere, I believe, at the 1519, and then above that 1589, and then above that 1710. Now the current support sitting at this one here is as follows. So we're looking at 1414, 1370, 1304, 1198, and 1142, and the really strong one at 1040. Now taking a quick look into the company's perspective. Now we all know EB Games, unless you are in a very, unless you're in the baby boomer age, you most likely have stumbled upon EB Games. They've been here for quite a while, and I'm going to go through quickly the company presentation itself to try to give an identification to, well, how they operate and a bit more stockholder information. So I'm not going to go through the executive summary. I'm going to skip to there. Really, I can go through a couple of stuff here. GameStop now has a new management team and newly refreshed board, with 7 out of 10 directors have joined in the last 19 months. They're coming out with a new whole-out team, even though that team kind of got slapped in with the pandemic for around 6 of the 19 last month, so that is something to consider. Other than that, it really looks in terms of looking as a reboot plan and try to come back stronger in terms of their business itself. They're saying that their HISTA permit and their nominees lack the understanding of GameStop business and prioritize short-term financial engineering that was significantly damaging to the company. And just an overview of what HISTA and permit are. GameStop has engaged extensively with Hesta and Permit since 2019, including adding their proposal nominee and additional independent directors to the board in September 2019 pursuant to the cooperation agreement with them. And so basically, it looks like something is going on in there. Nothing seems to be significant enough, but Hesta Permit filed a preliminary proxy statement nominating Mr. Wolf of Hesta and Mr. Evans to the board at the 2020 annual general meeting that happened back in April. So it looks like they are really going through a major restructuring to try to survive their business. Meanwhile, that might look a bit of positive, but it shows a little bit sign of weakness in terms of the company structure. Now, in terms of net sales by category, they go by software, which is games, at 47%, 42% hardware, and collectibles at 11%. Total stores, they have around 5,500, just above 5,500. And taking a quick move forward to basically being a prime position in capitalizing on the growth trends, GameStop retained over 90% of their planned domestic sales of stores and remained open through the limit delivery ad-door model with no physical contact for customers. GameStop Australia business has remained open through COVID and realized strong positive comp sales. And GameStop has delivered significant year-over-year increase in pure play e-commerce sales since the end of March. Now, in terms of being ahead of the curve, GameStop captures significant market shares during launches. GameStop meaningfully participates in digital today and securing agreements with top vendors to deepen that engagement. Through Power Up Rewards, GameStop has built up audience of the highest value customer in gaming, many of which have indicated they will buy GameStop. So there you go in terms of even having a potential for a buyout too. GameStop has transformed into a true omni-channel retailer with seamless purchase options online and in-store for customers. And so what is their reboot plan? The reboot plan goes on as follows, based on their actual website. A year of change for industry. They have new leadership team, strategic reboot, new console launch for announced holidays 2020, reorganize the business drive to efficiency, eliminate cost and strengthen balance sheets, healthy liquidity, ability to generate cash flow through rigorous working capital optimization. In response to COVID-19, GameStop has implemented a number of safety measurements, various operations, and financial actions to make sure GameStop remains a strong and environment company at the end of the pandemic. GameStop remains the market share leader, a clear strategic strong balance sheet, and ability to generate cash. Next thing coming is their execution of strategic turnaround plan reboot. And it goes under four main things: optimization core business to drive efficiency and effectiveness, build frictionless digital ecosystem for content and commerce, establish GameStop as a social and cultural hub for gaming, transform vendor and partner relationships for future gaming. It all sounds exciting. They have a lot of different strategic strategies they want to move forward, but from what the looks of it is that what they're looking to do is a full-out revamp of the entire company itself. Meanwhile, that is exciting. You gotta think about what is there yet to come in terms of coming in at the next step. Now, the next step for the actual company here, what it looks like is it has a problem with Hesta Permit and is focused on financial engineering. And you get to see it's more of an internal kind of dysfunction that is going on. Basically, the GameStop is listing onto Hesta Permit into why it should not be added to our board, why the nominees should not be near the board, no retail experience, no video game experience. It goes on, ramping on one by one. And again, this main presentation goes on into why GameStop board is amazing in terms of going to be able to restructure it, why Hesta Permit agreement should not have boards added to the board or nominated, and that is basically all it is. Now, moving on towards their quarters in terms of their financials, and that's exciting stuff for me. We want to see how their actual company operates year per year. So they did have a 13% reduction in total total store operating days due to temporary store closures due to COVID, 10% reduction in the store base as a part of the company's densification strategy, partly offset by almost 40% of closed stores recaptured through transfer to neighboring locations and online. Now, going on towards their financials. net sales. You're looking at 942 million compared to 1.3 billion from last quarter. Now, big thing about it is in terms of their losses, they decreased from $415 million in net losses to only $111 million in net losses. Now, while that kind of comes in as big numbers, you actually see a bit more of an improvement. Net loss is still looking a little bit better. Now, when it comes in towards the net cash, their cash is 735 million, so offering or refinancing seems to be a little bit off the table here. Almost $4 billion in total assets. So they are net positive, yet they actually are delivering negative results. Now, I'm going to be explaining why I think this thing's going to be changing. Recent news with Microsoft showing a multi-year strategic partner with Microsoft. That is positive. Mainly, it basically goes on through GameStop will standardize the company's business operations on Microsoft's cloud solutions and hardware products to deliver rich new digital experiences for customers, creating the ultimate gaming destination for gamers. Its vision, the premier omni-channel customer access point for the video game products. Now, institutional buyers, what we get to see here is Senvis Management, RC Ventures, additions in terms of the company for the last, say, month and a half. You get to see that they have taken stake almost 20% of the company itself. What it looks like is mixed things when it comes towards institutional buyers, whether adding or decreasing shares. Insiders, I don't see anything significant. And coming on towards their 48-hour sales, so they actually did have something for GameStop one up 48 hours on Pro Day sale events. That happened on October 13th. Expected to drive in sales. I believe the Pro Day sales 17th to 18th. So it kind of looks amazing when they come in through, well, sales and try to drive in sales up. But now coming on towards the future for this company. The future for this company still looks quite nice. And why I say that is you're decreasing your net losses. It looks like it might be profitable down the road for one reason. If the pandemic has driven anything, is driven basically people being more comfortable with buying online stuff. And if GameStop was to decrease their numbers of locations of physical stores and increase the number of their online operations, and with this restructure, they're able to increase their number of net sales and a better balance sheet. Now, the biggest question onto this one here is this uptrend justified? I would say, well, this uptrend really doesn't play in terms of different catalysts. It's more of people believing in the company. You get to see it's actually looking a little bit tough, a little bit of resistance here and there, but it looks still strong. Now, the main big support coming down would probably be around the $10, so it's 40% above there. If a market correction is seen, this one might follow as well. It's really playing on hopes rather than financials and technicals. That's a dangerous thing to be. Nonetheless, a lot of people have picked up gaming during the pandemic. Working from home, staying from home, you free a bit more time. So this puts GameStop in the right place as well. What do you think about the sticker? Make sure to mention down in the comments below. Subscribe and like. You have a wonderful day.